G'day guys, and welcome to the weekly VEMA Trader Market Scan. My name is Rhys, and in today's video I'm going to be giving you my thoughts on Bitcoin. Just before we do that though, I wanted to give you the heads up that we have our quarterly strategy meeting coming up very soon. At that, we're going to discuss what we work on over the following 3 months. So if you have feature requests that you want to see implemented, the best thing you can do is head to the support page and either write the feature request if it doesn't exist yet, or vote for the currently existing feature request if it's something that someone has already suggested. What we do is we look at those votes and it helps us decide what we're going to work on over the following quarter. So the more votes something has, the more likely it is that it'll get implemented in the following 3 months. So make sure you head to the support page, give the feature request a scan and vote for anything you like the look of. What we'll do now though is we'll head to VEMA Trader and we'll get started. Righto, so starting out on the weekly. So last week the candle was a doji. Now that is nothing to get excited about. It kind of worries me if I'm being completely honest, because we've just had such a harsh sell-off. To see indecision in the market rather than buyers stepping in strongly just makes me think that there's probably more downside on the way. Now, like I've been saying for a little while, markets typically move in waves, and we have had a huge sell-off without really any retracement. So something like that is what feels the most likely to me. Now, I'm not actually saying we're going down to 6,900. That's just a rough sketch. But yeah, a retrace to sort of 29,000 and then down. Or, I'll reassess at 29,000, but a retrace at 29,000 is what I think is the most likely next move, but I don't really think that's much more likely than just keeling over and dying. Just because we're really not seeing buyers step in so far. We are still holding 20k, but nothing here is making me really bullish. Nothing here is making me think, oh yeah, that retracement at 29,000 should be coming. And that does definitely give the possibility that we just wilt and go straight to that 20k level and try and find buyers lower down. So that's really all I'm seeing on the weekly at the moment. I really like that 29k level. If we do get there, I think that's a great place to be looking at shorts potentially. There's just a lot of things that line up there. You've got a weekly EQ, you've got a weekly supply zone, you've got the 38 fib. So that's really all I'm seeing on the weekly at the moment. On the daily, I thought we would start looking at the downside just in case we do get that break. It's always good to have an idea of where you think price might be heading. So the levels that I'm looking at on the daily are 12k and 9k. They're probably the two key ones. 12k, it's a really nice EQ. It's historically been quite a significant level for Bitcoin. So, could definitely see some price action there if we do get down there. If that breaks, there is a daily level at about 11.5. You might notice that I've made that quite a bit wider than I typically draw my zones. Rather than just drawing off that last candle, I've actually used that entire consolidation zone. With moves like this, I would rather err on the side of caution and just widen my zones out a little bit rather than trying to pick, to the dollar, because these are huge moves. These are huge moves. And, I don't want to get front run. I don't want to miss out on a potential big gain because I was trying to just really nail the bottom. That's something that I used to have a really bad issue with, was trying to pick the exact bottom or the exact top and missing by I remember one of my trades, I think it missed by 50 cents, and on a couple of $1,000 move, that is ridiculous. If I'd gotten in, could have made quite nice gains, but because I was being too perfectionist and really wanting to nail that bottom, I was missing moves. So I would rather just widen my zone and miss out on, what's that going to be, like point something of a percent. There you go, 1.5%. Rather miss out on that than really try and refine my zone perfectly and then miss the move completely. Below that, this 10k level, that's one that I quite like. So the 11k one is the move that led to this huge push up, but it's a pause zone. And where that move really originated was about this $10,000 level. You can see that was a level that was retested. So we pushed up, created the zone, came back and retested it, and then we went on a tear, right? So I really like that 10k level. And I mean, 10k, just a big, nice round number. In fact, there's probably an EQ you could draw in there. Probably about there-ish. Yeah, probably about there. So, 10k, significant psychological number. Pretty important level potentially, and then 9k below that. 9k is kind of if we break 9k and start to really close below there, that's when I would start to actually worry about the state of Bitcoin a little bit. But that's hopefully a long way off, and I'll reassess if we do get down there. So what are we looking at currently? So there is a bit of a pause zone. So it's quite a weak one. In my opinion, for a daily pause zone, but because market sentiment is so bearish at the moment, it could be enough to hold us there. And if we do hold here, then I think breaking 20k is, it becomes a high probability, because people start to go, oh, geez, if we can't even buy up this far, then Bitcoin's dead. Bitcoin's dead, not going to sell. So not looking good at the moment on the dailies. It doesn't look awful either, but there's really nothing that I see here that gives me confidence, that we are going to head back up to that 29k sort of level. We have pierced this zone completely, so I would probably consider that invalid, but I'm just going to keep it there for now, essentially until we sort of actually move through it, because it has held previously. We've got a really nice tweeze up bottom there, and we still have the sort of 17k and 16k zones just below it. So there is still a decent buying range that may hold us. We may even range here for a little while, doing something like this, maybe get some wyckoff happening. But yeah, in terms of what I can actually see and what I can look at, those are a lot of this may happen. In terms of what I can actually see, really not seeing anything that makes me feel bullish on Bitcoin. So that's it for me on the dailies. And finally, on the 4 hours, the levels I'm paying attention to are essentially the same, right? About 18,300, there is what I would consider a weak demand zone, because we did have a very solid buyback from there, but it hasn't really led to a change in market structure. I'd sort of need to see 22,000 broken. To me, those are the recent highs. So until they're broken, I'm not super confident in that demand zone, but it's definitely a valid zone at the moment still. Then we have one at 22,169 roughly, so that's a pivot zone. We moved up, we moved down, and also a pause zone at 23,000. Now this zone's kind of funnily drawn, because I do believe there's a zone in there somewhere, right? You can see, we came up, retested, rejected, we wicked up, we held a lot there. Some people might just draw an EQ along something like that, and that's probably valid too, right? I just prefer to use zones. It's just more how I think. That's kind of what I'm seeing in terms of levels on the 4 hour. Now, there is one other thing, and that is this ascending wedge. Now, not the cleanest ascending wedge, so I've drawn on the line chart, and I've used these closes here. So, we did get 3 touches, maybe even 4 if you include that. I probably wouldn't, but 3 touches on downside and 3 on the upside if you include the most recent. So it's not a ridiculous wedge, certainly. And if you are going to draw it how I've drawn it, then it's actually broken and retested and sort of confirmed, right? It started to push back down. So a bearish wedge is a bearish pattern, right? An ascending wedge is a bearish pattern, and especially after a big harsh sell-off, to get the ascending wedge is kind of showing a weak retracement. Buyers aren't able to push price up that far. So they are pushing price up here, but they can't really make any ground. There's still sellers stepping in the whole way here. So that sort of makes me think that the downside is still more likely. I know big picture, my downside is much more likely, or my thoughts are the downside is much more likely, but even on the 4 hour, that sort of, it sort of worries me a little bit to see that. Because I'd like to see, some bullish action on the 4 hour to get that retracement on the daily or on the weekly that I'm sort of looking for. The fact that we've had this ascending wedge and potentially broken and retested, right? Trend lines are very subjective, so some people wouldn't draw it that way. Some people wouldn't draw a wedge at all here, and that's completely fair. But the trade that excites me this week is probably a short from here. So, because I do think if we do break this $20,800 level, which we may, it seems to be the key level at the moment. Right? You can see it's been a really nice EQ. We're holding it as support. We're holding it as support. We're holding it as support. If we break that level, I think there's a good chance we're coming right back down here. We could stop at 20, because 20 is a bit of a significant level. But I sort of feel like if we lose this level, then there's not going to be much confidence in the market. We're probably going to be going, lower to see where we can find buyers. So there is a trade that I like there. So I'm going to set that up, and then I'll run you guys through what I'm thinking. Righto, so this is the trade setup that I am going with for the week. So I did actually consider doing this as a break and retest, but I've decided to go with just a straight short cross with candle close. Now the reason for that is that because I do feel like if we lose this $20,800 level, it could be a swift move down. I don't want to see a close below here, and then there's just never a retracement, a retest of that alpha. I would much rather just get on that candle close, and if I get stopped out where a retest wouldn't have even entered the trade, so be it. This is how I'd much rather set this up than using the break and retest for me personally. So I always do like to use the operator on candle close when I am going for these break trades, because I want to get confirmation that we do close below that level. You can see that there's been a ton of wicks through that level, but it's very rare that there is a close. I think that is the only close that came below and then headed up. Every other close below has preceded a move down. So really want to see the close below that level before I get into it. Now, I have put an expiry date on. I've given it about a week to let this trade play out because I don't want to see price go up and do a bunch of stuff and then come back, in a month and I've forgotten about this trade and I get into a short that I don't want to be into. So put an expiry date of a week on there because it's just easy to do the expiry date now and I can just drag it along the chart like so. So that suits me. In terms of risk management, I've gone for 1% account risk because it's with my high time frame bias, 2 to 1 minimum risk to reward. I've just used a fixed value stop loss and I placed that above this sort of level because you can see, it's pretty rare for price to get above there. There is a couple of wicks, but I was going to destroy my risk to reward to allow for those wicks and they're sort of old. So I'm quite happy to have it right there right now. Depending on what happens during the week, if we do keep making structure up here, I might cancel this trade. I might come and change some things. We'll see, but I'll keep you guys posted in the Discord as I always do if I do change my plan during the week. And in terms of take profit, I am targeting the lower level, that 17k level. I do think there's a good chance it'll bounce from 18, but I would rather target there because hopefully, I'll have time to actually monitor and manage this trade as it gets down to 18. I can sort of make decisions based on what I'm seeing when price gets there. So I'm quite happy to leave my take profit lower for now because, you never know. You might wake up and price is already there and you're like, sweet, I'm so glad that I left it there. So that's sort of how I feel about this trade because, I am quite bearish on the entire market. So I'm sort of happy to shoot for bigger bearish targets because, I'm so bearish on everything. In terms of my journaling, like I said before, weekly and daily bias are both bearish. Got a 4-hour ascending triangle and we're holding 20,800 really strongly. So I'm looking short if we break below. I've tagged phase 1 because that's what I call this strategy. 4-hour EQ, because that is this orange level, the ascending wedge, the bearish daily bias, and with my high time frame bias, which is one of my most successful tags, which is not that surprising because, it shows when I'm trading with the market versus when I could be counter trend trading. Confidence is a 6, and I am quite happy today. So that is it for me. So that is the only trade that I'm setting up for this week. So that's it, guys. Hopefully you are staying safe with the markets. As we've said a few times, if you are struggling in these markets, paper trading is a great solution. Risk-free, gives you a chance to learn and to actually develop profitable strategies while you're in a bear market. And if you can do that, you are probably going to thrive in a bull market. So have a great day, happy trading, and I'll talk to you very soon.